The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Good morning, folks. Tommy O'Brien, my dad Tom, he is out for this morning. I'm lucky to be joined by our man, Mr. Basil Chapman. Basil, good morning.
Good morning to you. How are you?
I'm doing great. How about yourself?
Very good. Thank you.
Thank you for doing such a fabulous job on that top of the hour update. So we have a little bit of market action, of course, this morning. Market's positive. Surprise, surprise. We have the Dow up 54 points right now. NASDAQ up 21. S&P up about 2. Gold getting some big-time action this morning. As you talked about, Basil, up 1268 I'm showing right now. Pretty substantial move. And of course we have earnings and our man Jeff Bezos, our man, his man, becoming the wealthiest man in the world this morning, I believe. And I think the number, Basil, I heard this morning is as long as Amazon stays above 1063, he will remain that title over Bill Gates. So we'll see what happens. But speaking of earnings, speaking of Amazon, you know, coming out with their earnings today, so we'll see if he retains number one, number two. Let's go over to our man, Mr. Kevin Hinks. Every day, 12 o'clock, right here. Swim lessons, Kevin Hinks, Scott Connor. They do a great show all about options, and they have plenty to talk about this time of year, because what time of year it is? Let's go to our man, Mr. Kevin Hinks.
It's the most wonderful time.
Kevin, good morning.
That is a toe tapper, isn't it, guys?
You know, I wish we could play it every day, man, only because if earnings came like they did this time of year, that would be awesome, man.
Here's my question that I want you guys to discuss. Do you think Jeff Bezos wakes up in the morning and checks futures?
I think he might have this morning, maybe, right?
Right. And what do you do if you're Jeff Bezos waking up in your pajamas this morning and you're reading that headline on CNBC that you're the richest man in the world?
I don't know.
Morning,
I'd love
Jeff.
to be a fly in that room, though.
Man in the world. Yeah.
Well, Kevin, a very long time ago, I remember that every time Jeff Bezos was mentioned on CNBC, they played him laughing, and he has quite a guffaw. He has quite a exuberant laugh, and I think he got so upset that I don't know if he's been interviewed by CNBC ever since.
You don't cross Jeff Bezos, that's for sure.
And not only that, in his own quiet way, meaning that he's not a media haven, he has built an incredible, not just a product, but a system. I mean, it is now systemic to almost every major vendor.
Hey, good luck to anybody that gets in the way of Amazon. We'll see where those earnings come out this afternoon, right? Is it right after the close? Do you know, Kevin or Basil? But I believe it's
yes, sir.
Right after. So that'll be awesome. Are you guys going to be talking about that today, Kevin, on the show? Maybe?
It's going to be, of course. I mean, it's Thursday, so a lot of our show is going to be on futures, but we're going to be also obviously focusing on Amazon and Amazon's earnings. And, you know, Basil, it's funny you should say that, because within your statement, what you just said, I think you're pointing out where you know, what you can be worried about when it comes to Amazon. As I said this a couple weeks ago on Swim Lessons, the only thing that can stop Amazon right now is the government, is the FTC.
And regulations.
Absolutely. Because eventually, you know, government's going to step in on something that they do and make their path less easy than it is right now.
They're on the path to controlling everything, so exactly. At some point, that's going to have to be a roadblock.
It'll also have to have some monetary effect, because if the government's going to, I'm always thinking, most people don't know that there was a time where you paid per minute for telephone calls. Yeah. And I remember getting what we call trunk calls, long-distance calls from a family in different parts in South Africa, from different parts of the country. And you would say, quickly, and you all run to the telephone, and all you said was, hi, how are you, hello, go. And you didn't even talk. You just ran through those words. And that was because you were paying per minute. Can you imagine if on the internet, And if through Amazon or whatever it is, the government starts to charge even 1 penny per email, per whatever, or any transaction through Amazon, they start to increase. Well, the money would just come flowing in.
Right, exactly.
That would be quite a day if we woke up and that was news to hit for sure.
Yeah. But without that, make no mistake, there's very little to get in Amazon's way. You know, I'm only concerned about how they price their products, and that's what I think the FTC is eventually going to focus on, their pricing.
Yeah, there was a report I was reading this morning about they're going in. They have some type of secret team called like 1492 that's going into all healthcare, and they're trying to revamp the healthcare, just the records and utilizing those records and making them accessible. And probably, I mean, if you control the cloud, right, you should probably want to control the records for the entire health industry. That seems like a perfect fit.
Well, they're doing that already. I mean, the records, I could talk 2 hours about the record keeping, and every physician that I know says it's the worst thing that's ever happened, because now you have to fill in stuff that you never did before.
And I'm sure they know
some people are making them up because you don't even know what to say.
They can revamp. So, Kevin, how about real quick? We saw Facebook came out last night. So 165 about tanked down to 158. Up to 179 overnight, and then right now we're looking at like 173. So the move, Kevin, we talked about that yesterday. Was that like $5 or 5%?
I think it was in the 6 and change range.
6 and change. So quite a movement. I mean, Facebook constantly. I mean, I was watching it afterwards, as in they came out with their numbers, and I said, oh man, it dropped $7 and rebounded within 15 minutes, and then overnight 180. Not bad.
Yeah.
Mark Zuckerberg, maybe he'll be up in that Bezos competition soon, right? Kevin, thanks so much. We look forward to the show at 12 o'clock.
Thanks for having me, guys. Always good to talk to you.
We love it, man. Have a great day. Thanks. We'll be right back, folks.
His brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom is out this morning. He will be back for his program live this afternoon. So, Basil, lots of action. Not sure where to start. VIX, of course. I say, of course, trading at 935. Market positive. NASDAQ up 26. Dow up about 67. S&P up 3. Gold positive. Crude oil is positive. We'll take a look at natural gas in a few minutes. We have EIA numbers coming out at 10:30 this morning. Be interesting to see where that shakes out. But pretty amazing movement, as I was touching on with Kevin. I wish we had more time talking to him. That Facebook move, pretty remarkable. When I think the move was, like you said, expected move about $6 to $7, looking at maybe 4 to 5%. And, man, you're talking about Facebook. And overnight, just right after the news, listening to Tom on his program, and tanks right down to 158 almost instantly. Takes a little bit of time, claws its way back. And as of 8:45 this morning, we're up at 179, looks like 173.
And what's really interesting about the Facebook phenomenon is that in many ways, Zuckerberg was really a novice at the whole financial aspect. Yes, he produced an incredible machine, but to be able to monetize that and to do it so well, that really shows acumen, business acumen, and you don't always find that. You don't always find the person who...
You know, maybe it's in the same, you got to surround yourself with good people, right? And I'm sure he did a good job of that in some capacity, because that is so crucial as you're building out that type of an empire, to be able to delegate to people that have that type of responsibility. But I agree, monetizing what they've done. And, you know, it's technical in aspect, too. We use some money on Facebook to promote ourselves, and the user interface and the ease of which they've done it for small businesses, let alone building out, of course, where they're, you know, working with major brands that need to reach $1 billion. I mean, this ties in well this morning with Twitter, because Twitter, in the same respect, is not able to grow themselves right now, which is pretty remarkable at the number they're at. You got Twitter coming out with their earnings, trading down hard, 12-13%, and not slowing down, $17.21. Last night we were above $20. And, you know, Twitter's facing some roadblocks in that they don't have 1 billion people. So when you look at really reaching those brand recognitions, Twitter has the angle they try and take of reaching a more niche, influential, maybe is their angle for, but either way, they don't have the numbers. And competing with the likes of Facebook when they're excelling is pretty difficult. And you can see how, just like Amazon, they built out a product that people love, and then you start making sure that you use all of those billions of people and not use them, but, you know, you capitalize on that and then make sure you turn profitable. And Twitter, you know, we don't spend any money on Twitter to market ourselves, and you can see how a Facebook environment is just so much more conducive, and that doesn't even touch the brands that spend the real money on a company like that.
So what we're really looking at here, because of Twitter's sharp pullback here, and this actually made a peak D in the Chapman Wave and the daily, we've actually long a small position in for my subscribers, and fortunately we had a very tight stop. We got taken out after that peak D occurred. Okay. Now, one of the reasons is I thought there would be enough residual strength to say, well, now Twitter can at least, in talking about monetizing, they could start to monetize as Facebook shows the way. But it looks to me as if what we have, and I try to compare this always to the early 1900s, when you had I think here in Massachusetts, we had a couple of hundred automobile companies. Okay. And what happens is that as you start a particular product, or there's a new innovative medium, that becomes the person who starts, or it's the company that starts it, really is the ice cutter. They break through all the different resistance levels because there's nothing there in the first place. Sure. But what happens is you get copycats. Sure. And it's how the copycats, and sometimes you find that the if I'm trying to think what it was, my son used to play the video game way back. When it first came out, it started with an A. I'm trying to think. Atari.
Sure.
And then Atari breaks ground, and then they fall away, and someone else just leaps over their technology, and that becomes the cutting edge technology.
It's pretty remarkable just to take that example one step further, that Sony and Microsoft ended up being the major players in that industry of the PlayStation and the Xbox, and Nintendo, of course. But in reality, you know, the leaps that the companies like Atari, Sega had a jump on the competition, but then, you know, a technology company comes in, perfects what they're doing. But either way, yeah, I mean, you know, I don't see the youth of today, and not like I'm in touch with the youth, but I don't see new people coming onto Twitter. There's too many other options, like you put it, where you can be on Instagram and still be sharing your experiences, posting a comment along with a picture, which is pretty much what you do on Twitter, sharing your experiences, right? Putting out what you're doing for the day. You're doing that now on Twitter, on Instagram and on Snapchat. That's how you're sharing that kind of post of the day, you know, where you normally you'd say, oh, going to the beach, right? That's what people use Twitter for on a social, beyond the just, you know, political and company-wide announcements. They need social engagement beyond that, and that's where I just don't, there's too much competition in the same way. I know that's the example you're making, you know, let alone Facebook, because Facebook is its own entity and world almost. But Instagram, Snapchat, Twitter, they're competing for people posting what they're doing, and man, I don't see that. We'll see. But maybe all that data they have, just last point, maybe all that data they have is definitely worth something, though, right? I mean, in terms of being bought out and then used in conjunction.
Well, that was the other aspect as well. For the laggards, they might be looking to pick up whatever is left over there.
When I heard it was down 12% this morning coming in, you know, I said maybe that was an opportunity in itself, because they are a brand that is not going away in the same respect, and that is tough to say, where you know that that's an entity that people will use, will be around, and the data and the messaging to be able to control that could be something that works well with a company like, you know, the names being thrown around, whether it's...
But it is all about numbers, and if Facebook and Amazon and Netflix and Google, if they are so powerful that they can become the medium, the benchmark for everything else, in this particular era, the speed with which they become billion and maybe trillion-dollar companies is just so quick. I don't think we've seen that kind of speed in the history of the economies going, you know, all the way through for hundreds of years. Although you did get Standard Oil, and you've had them before. You had the media magnets from the late 1800s going into the early 1900s. You had the steel, but I think what's happening now, when you are actually touching billions of people, it's so different. And in an instant, I mean, we're talking about speed, we're talking about there's a fraction of a second difference between speaking something now and having it heard around the world. That's
everything
never
is,
been.
you know, at your fingertips. I used Uber Eats for the first time over the weekend, you know, so same thing. Uber revolutionized, throw them in the category, right? You know, anything at the fingertip. At Starbucks, I now use the online ordering. So you pull up your phone, you press the button, you just walk in the door, and your coffee's sitting right there ready. You have to jump the line. Okay, folks, come on back. We'll take. I know we have natural gas coming up. We got our man Mike from Somerville. We're going to be taking a look at Verizon. We'll be back in 3 minutes. Come on back.
Great.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. EverBank is a member, FDIC, and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Basil Chapman, Tommy O'Brien. Let's take a quick look. We had the natural gas numbers break, Basil. We'll pull up the numbers. I don't have them yet, but we have a bid under natural gas. We were trading just above $2.93, looking at the September contract in natural gas. And as the news breaks, up to about 3 pennies from there. So maybe a surprise to the downside for EIA inventories. We'll pull that up. But I had checked the Nadex spreads beforehand, Basil. We go over this sometimes. Trading at 293, we like that volatility trade sometimes, and they were lining up at about 290. So about 4 pennies off, which is a decent move away from where you'd want to set that trade. So not too much action going on over there. We'll check back, but let's go over to our man Mike in Somerville. Mike, good morning.
Hey, good morning, guys. How you doing, Basil, Tommy?
Good morning,
You
Mike.
guys aren't far from each other up there.
We're not.
Yeah.
Hey, listen, Tommy, I think Tom from Plymouth has to take us all out to Regina after that J-Nug yesterday.
Yeah, we got some action in gold, man, for sure. How about that move?
Beautiful.
At your destination on the left-hand side after 800 feet.
We're almost
and I know Basil was talking about VZ yesterday on his show, Verizon.
Yeah, so
Right.
what are you up to with Verizon, Mike?
What's that, Tom? Sorry?
What are you doing with Verizon? Do you have stock in there?
Oh,
right?
Yeah, that's in my 401k, Tom.
Sure.
Yeah.
So quite a move, of course, trading 46.91 right now, as high as 47.29. And Basil, what were you talking about yesterday? I didn't have the chance to listen.
Well, over the past couple of weeks, I've been talking about the dividend stocks, and that we were looking, actually, for my subscribers, we were going to, I can't remember if we tried or it's a little while back, about a week or so, but we were looking at Telephone and Verizon, and my comment was that as dividend stocks, my thinking was that even though there's competition, they seem to have held quite well, and we want to watch them very closely here because they seem to be a little bit better as dividend stocks than ExxonMobil and Chevron, just because of oil's volatility.
Sure.
So yesterday, telephone had a spectacular move to the upside and is following through today.
Yeah.
I mean, just a couple of days, a week ago it was in the 35s,
yes.
and now it's at 39, and now you've had the same follow through in Verizon. What's really important about this is that the power of the move over the last couple of days has really eliminated all those down moves in the weekly chart. And this says that if Verizon at 47.24 can just even fill the gap partially, maybe going to the 45.50s, doesn't break down, but starts to move slightly higher. I have a webinar coming up where I'm talking about sector rotation. This was going to be, will now certainly be part of what I'm looking at in the rotational aspect. And it might be that fund managers are looking to say, hey, you get a dividend. They've held very well. They've come out with good earnings. This must be an earnings report today. And now they're in play, just as the IBB was lagging, and then all of a sudden it came alive. I'm thinking this is part of that sector rotation.
It's good news either way, the kind of action you got going on in your 401k this morning, Mike.
Yes, thank you, Tommy. Yeah. Well, it's always good when something like this happens, right?
For sure. So what gold? You had the 1260.50 gold weeklies, right? What do you got going on with those?
Yeah, that's it, brother. You got it. 1260. I got till tomorrow, right?
You do. So let's take a look at those. We're going into the gold, the weekly binaries. Let's see where they're trading at right now so we can follow along. So right now, gold trading at 1264.39, and that's looking at the December contract on the Nadex platform. Looking at the 1260. So right now they're trading at 62 by 68. So you can see you're only $4 away from the strike price. So, if you closed out that trade, it'd be 62 right now. I feel like you're saying you're going to give it some action until tomorrow. But if you get action where we've done this before, Mike, just keep your eye on it. And if you're in front of the computer, as time premium comes out of that, and gold, if it just stays at 1264 or 1265, you may be able to take 85 cents on the dollar off tomorrow, sometime in the morning, potentially before 1:30, and not risk, all of that if you're in the money for the final 3 hours of the week.
No, I agree, Tom, because
maybe you'll have to give us a call.
Friday's a tough, brother, right?
Hey, we've seen gold, if sometimes, you'll have just 85 cents, and, I think you only put up somewhere around, $36 to, make 64, right, that type. So if you have the opportunity to take 85, 90 cents on the dollar off on that trade with 2-3 hours left on a Friday, just something to keep in mind. We've seen it before.
It also depends on how many contracts, right?
Yes, and how many do you have? Is it one contract, Mike, or a couple?
I have two.
You have two, so then definitely considering taking one, right?
One, yeah.
Yeah.
Because I'm looking at it in daily. It could be pulling back after this bounce.
Okay, so there you go. Keep your eye on it, Mike. Because Basil looking at the great thing. So he's got the 1260.50, and it's at 1264. So that's where really, if you can just stay at that level, the time premium will come out of it, and you'll be able to take that money off the table. It's nice. You almost have the move you need, but hey, you have a lot of time, as we know, until tomorrow at 1:30.
I think that's good advice, Tommy.
Awesome, Mike. Well, maybe we'll talk to you tomorrow. Thanks so much for the call, and have a great day, man.
All right, guys. Thank you.
Thank you.
Good luck, Mike.
Yeah, that's the kind of move you want in gold when you're trading those weekly binaries. That's for sure. We wake up and gold's up $15. I mean, we've been talking about it, Basil. Though I'm sure you've been talking about it. The dollar move, so substantial for gold, and Tom, my daddy's been saying it as well, that you could wake up and gold could be up $30, $50 someday because the dollar has just been taking such a beating to that type of a relationship.
What's interesting for me in terms of the dollar, if you look at the low that was made in the dollar on the weekly chart back on the 24th of June, the low was 93.02. Then it took a certain number of days to get all the way to what we call a recycle in the chap wave to this peak G top.
So you're talking about a year ago, June, right?
Yes. Sorry, okay. I should have said that.
That's all right. I'm looking at your charts, definitely.
Right, and now we're looking at January, the week of the 6th of January of this year. It goes to, well, this is a continuous, the index, so it goes to 103.82.
Pretty remarkable.
And now there's a technique that I use that says on the left side, if you go from that low that was made back in June of 2016 to the high of January, the number of weeks on the left side last week was exactly the same. This week is now one extra week, and we're talking about a year. So we're talking about 52 for
Pretty
whatever
cool.
it is, right? And we're missing it by 1 week, but the price point is within 93.02, and today's low, this week's low, is 93.15. So you're talking about 13 cents.
Yeah,
over
after a $10 rise up, right? I mean, that's so, yeah. I mean, talk about...
I love this technique. So this is a technique that I developed, and this is part of what we'll be looking at in my webinar coming up next week, because I'm looking at the type of chart patterns we've got to become more familiar with going into the third quarter of this year. That's where we're in now. And what kind of patterns could be repeated, and what are the ones that are potentially able to change?
Good. We can talk about that a little bit more after the break. I have it up on the front page. Can sector rotation buoy the market into 2018? Two-series webinar that starts, can't believe it's going to be August and Wednesday. We'll be right back,
August,
folks.
Yeah.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White has just announced a new online course that he'll be premiering to his subscribers the evening of July 26th, The Next Wild Wild West of Computing. Machine learning will be the biggest growth area for tech companies in the next 10 years. Make sure you're ready to capitalize on that opportunity. With over 50 types of algorithms and growing, Dave White will tell you why there are so many areas for companies to apply this to their business to both sell and consume. Right now, you can get a 30-day free trial to either of Dave's newsletters, Path of Least Resistance and The Technology Insider, as well as get a 30-day money-back guarantee when ordering Timing the Trade charts. Don't miss out on the next Wild Wild West of computing as it premieres July 26th for all subscribers to Dave White Services. For all the details and to sign up today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. folks. Basil Chapman, Tommy O'Brien. So, Basil, we got it up here. So, can sector rotation buoy the market into 2018? And I know you've broken this down into 2 webinars taking place Wednesday, 6 days from right now. The first one on August 2nd. And if you can go into what you're discussing kind of in that first one coming up, and then what you're going to do 2 weeks from them in the middle of August, August 16th.
So what we'll be looking at, especially since the month of July will be complete, I'll have the candle for the monthly charts. And what we'll be looking at is, will there be a chance, if there is a pullback from the most recent sector highs, and they go out of favor as they consolidate the big gains, what other sectors are there that could take the place? That's number one.
Definitely.
How could it work? What are the implications of higher rates? How will it affect the home builders? What's this we're speaking about? Amazon. How's this going to affect stocks like a Macy's? Look at this, a Macy's, which is, let me just get there, which has pulled back. This was one of the premier companies in the industry, in the retail industry.
I'm going to give. I saw that you had this in your charts this morning, Basil. I was following your opening call. Yeah, go ahead.
Right. So, so Macy's trading at 23.82. We actually have started a long position in this.
Okay.
It's really a test case because after such a smash from 73.61,
quite a bargain, right, compared to the price it was. Right. Yeah.
So at a certain point, I mean, there is still an issue. If you go to the mall, certainly around here, there is still a parking issue. So that says people are still going to the malls. Maybe they're not buying as they did. Maybe Amazon has had a tremendous effect. Maybe it's not Amazon per se, but it is the concept of looking for a bargain, looking elsewhere.
Oh, I agree. So, I was at the mall last weekend. I happen to have a gift certificate for Nordstrom. They're having their anniversary sale. I said, you know what? That's a great time to go try and use your gift certificate. And, man, it was a madhouse. Now, they're having a sale, but what I found so intriguing is that the sale's a portion of the store, and people were shopping basically everything the sale included. You know, like they were there and they were shopping, whether it was a sale or not. There was plenty. I agree. I could only be there. I actually didn't even buy anything. It was so crowded. So my personal experience agrees completely with what you're saying. Yeah.
So they're not going out of business. They're having to say a tough time is an understatement. They're having a really difficult time.
Sure.
With the companies that have been in these positions before for other reasons, if I had to show you the monthly chart, long term,
and they've paid the price for their chart as
2007, $46 down to $5.80. They've been there before.
Sure.
These are the smartest people in the business. So I suspect they will survive in a different way. Maybe they're going to have to do things, and that whole thing with sales. That's what I'm going to be discussing as well. The competition, you know, prices usually come down when there's competition. The more competition, the greater the objective is to try to sell product, and you have to bring prices down. You might not get the same margins. Well, if we're looking at the retail, the RTH index, which is this is the index that I like the most, the Market Vectors Retail ETF, it's had a pretty nice bounce back, and it's not broken down. If you look at the monthly chart, you'll say, hey,
that's a pretty remarkable chart. I agree.
Would you believe? Yeah, this is a question.
That wouldn't be my guess as to what the chart would look like, right?
That was going to be my point.
I got your thought exactly. Yeah, no.
Right, and I ask people that have been doing this for months and months. My friends, the lay people who really know nothing about the stock market or anything, I'd say to them, would you say that McDonald's, in this era of politically correct, would McDonald's be higher in price than Whole Foods? And they just, to a person, they say Whole Foods. Well, I want to show you something. I know it's going to be taken over, but Whole Foods trading right now is steady, but it's at 41.78. It made a high of 65.59. Now, of course, we're talking about a supermarket type situation, and McDonald's is different. But I'm just saying it's the same thought process that you got to have, and that's to be as broad-minded as you can and say, wait a minute, Whole Foods should be at all-time highs. Everybody talks about healthy food. Let's see what McDonald's is doing. McDonald's made an all-time high 3 days ago at 160, 159.98 actually, and it is up from below 90 a year ago. It is up $60 from the low. So, you know, that's the same thing that I'm saying. I don't know if Macy's is going to go insolvent. I don't think so from the way I'm looking at it. It's been a very big challenge. I suspect that companies like Macy's that have done very well before and survived will do well, and the ones that couldn't, have always had a tough time, will continue to have a tough time. So that's going to be what I'm talking about. What are the areas that could probably rally, at least for a few months, into the first part of this third quarter? And then what are the bigger contexts in looking at, say, the SMHs, which is the semiconductor index, which led us on the way up and has failed to make a new high on this retracement after going from 89.72, an all-time high, down to 80. It's only 9 points, 11%. Not a big deal, but it's run all the way back to 88, but it's struggling, unlike the QQQ series, to make a new high. What are the implications? And it's really fascinating because this rotation into sectors that have been absolutely decimated. The IBB, iShares, Nasdaq Biotech goes from 400 down to 240. Now it's at 324. So it means that the fund managers who were wrong, who are perfectly correct every hour of the day, going into the high in 2015, were completely wrong, going all the way down to the low of, say, January of 2016. Now they've come back. Can that last? And those are the things that I'm talking about. So what we're going to be doing is I'm going to talk about the relationship of where we are with the monthly candles, where we are in the different sectors. Then I'm going to talk about what we're trying to do, trying to find under the radar stocks that maybe have nothing to do with the general market. They're just in their own world. And then we're going to be looking at sector rotation. And the question is, can this market continue with just minor pullbacks all the way to 2018? And what will the sector rotation, because every time there's been a correction since the summer of 2010, every time there's been a rotation through different sectors to say the strongest are now taking a breather, the weakest are going to hold the market up. And it's really the high-level consolidation.
Somebody's always stepped in to pick up the slack. I agree. Man, quite the trends that we've had in those leaders. But
and the question is, can that continue? And I'll have some answers to at least my perspective.
I'm going to be watching. It'll be interesting. You know, I was jumping around. So, of course, come on over right to the front page. The opening call, you can sign up for a 30-day free trial. You'll get access to both of these webinars in the month of August. And, you know, jumping around a glimpse, I just pulled up, Basil, your opening call to give them the quick glimpse. I mean, this is so you have great stuff in here every single day. Lots of charts, jumping around real quick. We'll give them a glimpse of that opening call, what their subscribers are getting. And as we were saying, you were looking at the S&P. I saw Macy's in here somewhere. There it is. You had the Macy's chart broken down. Some great stuff. So check it out, folks. The opening call right on the front page of TFNN. And Basil will be doing that workshop. Okay, the hour is flying. We got 5 minutes left. Come on back. We'll see where that natural gas contract, if we're getting any action in that contract, and we'll wrap up this hour. We'll be right back, folks.
Trading is different than investing, but the opportunity to take advantage of short-term trends is only one if you get the direction right. Direction leveraged and inverse ETFs offer bold trades on U.S. and international stocks and bonds. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors. Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
O'Brien, Basil Chapman, S&P's up 5, Dow's up 73, NASDAQ is up 37, and jumping back to natural gas, we're looking at 298 right now. Quite a move we've gotten from that rise of about 292 prior to the news. Basil, have you taken a look at natural gas recently? What do you? I see you have the UNG.
I've got the 10-minute UNG right now. It's in a leg E in the 10-minute chart. So I'm looking at the natural gas, and what's really interesting about natural gas, it's been stuck in this low range. We're talking about. I like to talk about upper level consolidations and lower level consolidations. At the lower level consolidation we've just seen in Macy's, you're looking at almost the same thing occurring here in the natural gas contract. What's really interesting is if you want to just talk about chart formations, and this is what I'll be doing in my webinar as well, talking about chart formations, the cup and the arch formations is going to be very important coming into the August period, into September. Look, there's a cup formation, and we've got almost like an inverted head and shoulders, left side shoulder. This is the head, right side shoulder. It looks very much that the levels are the same on the left and the right.
Very symmetrical, right?
But look
Definitely.
at the way the stochastic has been, the MACD is rallying, stochastic's moving higher. It's still choppy, but it is moving higher. So the pattern that I love to look at is, you see in the weekly, the arch formation. What happens is, if there is a lower low than the left side low of importance, that's the one week of the February the 24th, 2017,
okay,
and there's a close below it, it means that the next level of resistance will be either a moving average or a peak on the left side. Well, the peak on the left side is way up at the top. That was made back in the week of the 12th at 3.527. So I like to say, okay, go step by step. So we've got a leg A here, and what you want to see is by early next week, maybe Tuesday afternoon, Wednesday morning at the latest, you want to see a push over 3.0097. This is the continuous natural gas contract. Why? Because that will extend this leg A. It'll be the first time in weeks that you've got A extending to a second bar. That's really important. So as a short-term trade, you were absolutely correct. Nice push to the upside. What's really important about this is we've seen this in a lot of formations. Monthly charts have gone to a nice arch formation, come back, retested. The second arch has to be bigger, and that's really going to say natural gas at 298 really has to get into the 3.11 area, and at that point it's gotten through all the resistance levels. That'll be very positive.
Hey, we're not far from there. We're up 7 pennies in the last 25 minutes, so we're only 12 pennies away from where we're talking about, right?
Yeah, that's good action so far. And one of the aspects that we're looking at is how does this whole natural gas and oil, how does this fit into this coming quarter that we're in, the period going August, September into October? And that's, of course, when we've got the winter coming up. What are the implications? So I'll be talking about that. So the first webinar is going to talk about the themes, but immediately I start, every single day we'll be looking at particular charts that we either want to buy or looking to buy or even to short. And every day we'll be looking at them as a study piece for the 2 weeks until the second webinar. And that one we're going to see how we're following through. Has there been a theme of cohesion? Are we looking now at some breakouts to the upside in the weaker sectors and breakdowns in some of the stronger sectors? It's going to be an important webinar.
That's awesome. And those, folks, are 90-minute webinars, so you're getting an hour and a half. Each of those weeks, 3 hours of action over those 2 weeks, starting on Wednesday. Well, Basil, that was a quick hour. Thank you so much. We look forward to the show, of course, at 11 o'clock.
Thank you very much. Always enjoy it, Tommy.
Definitely, me too. Okay, folks, stay tuned. Kevin Hinks, swim lessons coming up at 12. We got Amazon earnings, of course, after the bell. Steve Rhodes, Dave White, Tom will be back this afternoon, and it's Thursday. Andy Hecht. Thanks so much, folks. Have a great day. We'll talk to you tomorrow.
Basil Chapman will be giving a 2-series webinar Wednesday, August 22nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018? Each time the market feels it's ready to have a sharp decline, formerly weak sectors rally to hold the market up. This 2-webinar series will be free for Basil's opening call subscribers, and non-subscribers will also receive his daily newsletter for 1 month free as a trial subscription. Sign up for a 30-day free trial to Basil's daily newsletter, The Opening Call, and gain access to his subscriber-only webinar on August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018?
Hi, everyone. This is Basil Chapman, and I'm looking forward to seeing you at my webinar series.
To sign up for a 30-day free trial to Basil's daily newsletter and gain access to Basil's webinar, visit the front page of TFNN.com.
This is TFNN.